Hi everyone. Today is Wednesday, the 6th of August 2025, 12:30 at lunchtime. It's Cass Smith and Mary Jane from Freedom Financial Solutions FFS doing our free fortnightly, monthly Q&A. So basically how this works is it's very broad brushstroke questions. If you've got any, if you've got something that leads to something more detailed, then you can set up a private appointment later. But we're happy to answer or in particular, Cass is happy to answer anything sort of within the bounds of our expertise, which includes self-managed super funds, tax, accounting, estate planning, and thoughts on what's going on, what on earth is going on in the world today. So how it works is if you've got a question, you can press the hand button, put your hand up. You can just jump in if no one else is talking, or you can put the question in the chat if there's a lot of people who are already asking. Oh, Julie, you have got your hand up. So ready, Julie, go.
Yeah, I am contributing additional amounts to my super. I'm just an employee, but I'm an employee rather than a business owner. And I know about the $30,000 limit. And I've spoken to Cass briefly about this before in another context, but I've been doing my sums and I've realised with the employer contributions going up to 12.5% this financial year, the amount that I'm able to contribute and still remain under the $30,000 maximum is a bit less. And I was just wondering if I do go over the $30,000, what actually happens both to my personal tax and to the superannuation fund tax, self-managed superannuation fund tax?
That is quite a good question that I will just need to have a little bit of a look at.
So while Kath is looking at that, can I ask, have you completely used up all your contributions from the previous few years?
I don't believe so. I haven't actually sat down and calculated every last dollar yet, but I don't believe so. So I think I've got a little bit of leeway, but I did just want to check just in case I haven't got as much leeway as I think.
Yeah, okay. So I just had a quick look at that to see whether it was still the same as it was last time I looked at this issue, and it seems like it is. But yeah, that point Mary Jane made, there is a contribution called a catch-up contribution. So, and is this into an SMSF that you are contributing?
Yes, yes.
Okay. So the good thing about the SMSF is that the accountant, as they're doing the accounting for it, in the next year when they're getting around to working in your fund, they can help you work out how to treat these things and what's the best way of doing it, because they can apply to the catch-up contribution, which is if you haven't used your 30,000 cap in preceding past years, they can allocate it to that. They can also allocate it to a non-concessional contribution, so it just goes in as a untaxed contribution. So there are plenty of ways around it so that you don't exceed your cap. I've just had a look. If you really do exceed your cap, what happens is that they take that money and put it in the amount that you've exceeded the cap, and they put it in your individual tax return. Okay. So depending on your marginal tax rate, you may be taxed at a higher rate. There's another way where they give you an option to withdraw it from the super fund. So it's not the end of the world. In fact, some people deliberately exceed their cap, and that's a really complicated strategy that I don't really go into, but it's not the end of the world. The SMSF accountants will probably just be able to fix it up for you, but the worst case scenario is you might pay tax in your own name on it.
Okay, yeah. Well, that makes no difference really from what I would do if I just didn't contribute as much, each pay period. So yeah, I just wanted to check because I did look on the ATO website and I didn't find that I could quite grasp what they were trying to get at, whether they were going to tax it within the fund or whether it would come back to me personally and tax it at the higher rate, not the 15% concessional rate.
Yeah, what normally happens is that they write you a letter in due course at some stage during the following year to say, hey, you exceeded your cap, these are your choices. And they give you choices as to what to do with it. But as I said, really when you're in like what we call the online funds, the retail and the industry funds, they're very much, I guess, harder to navigate. In the SMSF, there's a lot of ways that the SMSF accountant can just tidy that up for you anyway. So it's not as bad.
Okay, great. Thank you so much.
No worries.
Lots of people here. Anybody got a question?
Yes,
Oh,
I
yes.
have a question, ladies.
All right. So that's Richard, and then we'll go to Bronte after that.
Excellent. Sorry about that. I have a number of questions, but I'll just do one, just so I don't hog the program. Just to do with putting crypto into a trust. And I don't know if that's something we can do, or is it something that I'm hearing a lot of it about, and people are talking about you should have it somewhere in a protected environment.
Yeah, you can definitely do crypto in a trust. It's no problem at all. You just need to go to whatever platform you are dealing with. It just takes a little bit of more mucking around setting it up. But my son did one for our family trust only last week. You need to give them the trust deed and a few other documents and things like that. And then they set the crypto platform up in the name of the trust. That's absolutely fine. And quite a good idea in terms of tax planning for any future gains if crypto skyrockets, which I guess we're all hoping it will. The gains can then be split amongst family members, and there's a whole lot of other tax planning things you can do, plus just general asset protection in a trust. So the whole point of a trust is that the assets are in a separate entity. So if something happens to you, if someone sues you or someone comes after you or the tax office comes after you or anything that happens, the assets are separate in a trust. So definitely worth doing. We can set trusts up for you.
Yes, I'd like you guys to do it for me.
Okay. Richard, have we got your details already on our system?
Yeah, I'm sure you do, but how would you like me to email them after this?
Yeah, just Mary Jane can pop her email into the chat box. Email Mary Jane and we'll send you a document just to fill in an order form for a trust, and we can get you one set up.
Wonderful. And can I ask another one, or come back to me after? Maybe
no, ask away while you're here.
Just about cash in bank. What options do I have? I'm hearing again, half this stuff I'm hearing, I know not to believe everything, but is there somewhere other than the old basic, stuff that have been done for the last 50 years type of approach put by government bonds and all this sort of stuff? I'm not into that. Or I'd be into it if you told me, because I trust you, if you thought, no, yeah, okay. I'm at a loss as to, and I want to act on this quickly because I'm feeling that the environment's changing quickly, and I need some help with that as well.
Yeah, for sure. So this is something, I don't know how much you've seen of what we do, Richard, but this is what we've been talking about for the last, I don't know, is it 3 years, 4 years now?
Yeah.
Basically, I've been feeling that Mary Jane's holding up a book that we just released on gold and silver.
Yes.
Yeah, so for the last 4 years, I don't know how long it's gone now, but 3 or 4 years, I have been feeling a sense of impending doom as to the financial system. And people say, well, you've been saying this for years now, Cass. And I say, yeah, I have. But then again, the people who listen to me and put money into gold and silver are really happy at the moment because it's gone really, really well. But I don't think that's the end of it. According to the experts that I follow, the likes of Jim Rickards and Robert Kiyosaki, gold and silver are still continuing and will continue to absolutely escalate as this financial collapse comes. And when it's going to come, who knows? It could be tomorrow. It could be another 3 years. At the end of the day, it's coming. And I prefer to be prepared rather than wait till the last minute. It's like that skit you see about the animals that turn up to the ark, one day too late. When it's one day too late, it's too late. So I'd prefer to be a year early than 1 day too late. In answer to your question, what we mainly have been helping clients do, and I can't say recommend because I'm not a financial planner anymore. But what we help clients do is get your money into gold and silver in lots of different ways, either the physical gold or in an allocated pool or in a vault, or however you feel safe. and then splitting it between gold and silver, perhaps a little bit even in platinum and palladium. And then we don't do crypto, but I know there's a place for it in everybody's portfolio. So people have 5 to 10% of their wealth allocation in crypto or more if you so choose. But yeah, they're the sort of things we help with. Richard is mainly just getting the money out of the bank account.
Yeah.
Anytime people ask me, when's the best time to buy gold and silver? And I say, when you've got spare money in your bank account.
Yeah.
And that's what I do. I don't even check what price it is today. Should I wait till next week because it might drop? No, if I've got money in my bank account, I just hop online and I get rid of it and put it into gold and silver.
All right, great. Thank you very much for that.
All right. Bronte, and just so you know, everyone, I put a link to our gold book in the, there we go, in the chat, and there's a coupon so you can download a free copy of it. So the coupon is SMSF Gold FFS. So if you go down to the link on the website and put the coupon in there, you can get a free copy of it. So Bronte,
an online copy, isn't it, Mary Jane? And if they want the physical book, they can get one from it.
The physical one we're mailing out from our house. It's not our house. Our office feels like my house. It's not cheap because it costs us to produce it. It's $24.95, but if you come to me and you say I saw it on the Q&A, we knock $10 off, and it's $4.30 for postage. So it's a nice little book. It's got pictures, but you get the free one downloaded. Bronte, your turn. Hi, Bronte.
Hi. Can you hear me?
Yes.
Okay. I've just I'm putting a house. I've created a trust, and I'm putting a house that I'm hoping to buy into it. And I found out today there's land tax, and it's not cheap. I've never paid land tax before. Is there any way around that?
So Bronte, have you already bought the house?
No.
Okay. And are you living in this house, or is it an investment property?
It's going to be my primary residence.
Okay. Have you signed the contracts already?
I've signed to buy it in my trust.
So, Cass, just some background. Bronte came to us, what was it, last week or the week before, and was about wanted to make sure she bought it in a trust for protection reasons. So we've got our legal team with Grant set up a family protection trust, and they've been working on that. We did it really quickly because you were about to sign the contract.
Yeah. And what state are you in?
New South Wales.
New South Wales. Yes, this is one of the disadvantages of trusts. There is land tax every year. And depending on what state you're in as to how bad that is, and I believe New South Wales is one of the bad ones where there's no exemption for trusts.
Right.
Yeah, so land tax. So basically land tax is normally, for those that don't know, pretty much about the same amount as your rates. So you have your rates bill you've got to pay in every state. And then if you have land tax on top, it's pretty much a double bill. And no, there is no way around it, unfortunately. I've been dealing with properties in trusts for 20 plus years, and there's no way around it that I have ever found. I don't know if they also told you that in a trust you will not get a capital gains tax exemption. So if you're living in a house, one of the biggest tax exemptions we have in Australia really is that your own house has no taxes whatsoever when you sell it. So if you buy something for $500,000, sell it for $2 million, you've made $1.5 million gain, there's no tax. However, in the trust, there will be tax. Be subject to capital gains tax. Just as a ballpark, you can think that you'll lose about 25% of your gain in tax. And there's no way around that one either. Well, there are some superannuation concessional contributions we can do in the year that you sell the property. But yeah, other than that, there's no other way around that capital gains tax.
Yeah, I think Bronte's already beyond the concessional contributions limit, but also the main reason you wanted it in a trust was for family protection reasons, wasn't it? Yeah.
Yeah. So there's a way up, and a lot of people I consult with, after I tell them these things about the land tax, the capital gains, people choose not to buy in a trust.
Yep.
But there are plenty of people who still say, yeah, well, okay, I'm just going to have to suck it up and pay those taxes. So, for example, myself, I have for the last 20 years always had everything I own in a trust. for asset protection reasons. It stings every time I pay that land tax bill. But to me, it's like the land tax is like an insurance policy, really, just to protect you against things that might go wrong, from people trying to chase you for money, people trying to sue you, anything like that. If properties are in a trust, they're completely protected and nobody can get to your assets.
Okay. And the other question is, when I go and find some institution to get a bank account for, are there any good banks, and are credit unions any better? Like a local credit union I was thinking of using.
Yeah, look, we're really mixed on that. Firstly, we're not allowed to say anything because that would be giving advice. But from my personal perspective, I haven't found the small ones any better. So I went out of my way to switch to Bendigo Bank, away from the big majors, and I had more trouble with Bendigo than I've had with any other bank. And Beyond Bank I thought would be great because they're a nice little small bank. But the amount of times they just block my card, I go to use it and it's like not working. And the only way to unblock it is to sit on the phone for an hour on hold and get it unblocked. So they're all as bad as each other. I've gone back to sticking with the majors, where ANZ and Westpac. So when you set up a trust, just beware that the bank you deal with might just need a week or so to set up the bank account. So if you're buying a property, you might want to get that bank account set up really soon. Every bank is different. I've had ANZ set up a bank account for us in 2 days. I had Bendigo Bank took 3 months. So,
Right.
yeah.
Okay. And just you said two of the big four. You're meaning all of them, Commonwealth.
For personal reasons, and a lot of people will say the same thing, deliberately steer away from which bank.
Okay. All right. Cool. Thank you.
Okay, thank you. Okay, Dave. Dave Van Bockle, you're next.
Thank you. Good to see you all.
I do Kay and Tony in the chat. So there's Dave, then Jane, then Kay, then Tony.
Just trying to work out how we know when our age for retirement is where we can access superannuation.
Okay, so that's quite an easy one. The first, what they call release date, is when you turn 60. But that you also need to have that date. You also need to trigger a condition of release, which is by leaving a job or quitting a job, retiring from a job after age 60. So Mary Jane, you might want to add to this. As soon as you turn 60, if you can possibly take some time off work, quit your job, you can go back to work. So the condition is just you have quit a job, retired, resigned, after the day you turn age 60, and then you can go back to work any day thereafter.
So have you got your own small business? Is a technicality that you could satisfy to achieve that?
Yeah, definitely.
Yeah. All right. The second part of that question is, so I've got my SMSF with you, and metals is part of that. One of my strategies is to access some of that or liquidate some of those metals back into cash to pay off my mortgage once I reach age 60, so to stop paying the interest each month. Any comment or opinion on that as a strategy?
Yeah, no, that's a good idea. So that was what I was going to ask you next, because even when people turn 60, we don't necessarily say just go and rip all your money out of super, because the superannuation system really is the best place to invest. So if you're going to be making any gains on gold or silver or crypto or anything, it's great to do it in an SMSF. However, if you have a reason like paying off the mortgage, absolutely that makes sense. So take out the money, pay off your mortgage. The only I was going to say, with capital gains on gold and silver, sometimes I'll tell people to stagger it over financial years to minimise the tax. That doesn't apply in an SMSF because it's a flat 15% tax. So it's more a matter of you don't have to worry about the timing, just sell it up, take it out. There's just one thing to be aware of. An SMSF gets a capital gains tax discount after it's held the asset for 12 months. So
Yeah, I've
if
had
you've
mine
got any
longer than that, so
longer than that, that's fine. Otherwise, what I'd say is, yeah, just sell off what you've already held for greater than 12 months and keep what you haven't. Yeah.
Yeah.
And once you turn 60 and meet those conditions of retirement, it's capital gains tax free.
Yeah. But work with your accountant in FFS with that.
Yep.
Because to make the capital gain tax free, we have to put you into what's called a pension mode, which
Yep.
is really easy. We literally just tick a box on the back of the system.
Yep.
But just work with your accountant in FFS just to let them know that this is what you're planning to do.
Right.
When it comes to talking about that retirement, quitting a job, the accountants at FFS are a little bit more stricter than me on my explanations and interpretations of things. So by all means, if you want further guidance, I don't want to say too much on a recorded video, but if you want further guidance, it may pay to just check in with me. We have a personal appointment and I can tell you what to tell the accountants.
Great. Thank you.
Great. All right. Jane.
Hello. I'll just put my camera on. I was just wondering, my fund has literally just started or rolled over in the last couple of days. I previously bought shares and I did it through one of the big four. So I was just wondering what platform, like, do we open something with Vanguard, which I don't particularly want to do, but like to buy ETFs or shares? What's the best way to do that, or does Macquarie have that?
It's a good
facility?
question because we don't really recommend shares anymore. I used to be a financial planner for 20 or 25 years. So I was really on top of all that back then, but because I'm not exactly sure. Last time I did, we did share trading in the likes of ComSec, which is a Commonwealth Bank platform, or ANZ E-Trade. They've got a good one. I believe, Mary Jane, do you know if Macquarie has a trading?
Macquarie does have Macquarie Trading, but also what we get asked this quite a lot, and we say, well, there's a whole range that you could choose from. Just online, you can search CanStar, and they'll give you a comparison with how much people charge and what you can do, what you can't do, and what are the good ones. Obviously, there's the big ones, E-Trade and ComSec and so on. I personally used a little one just because I bought some shares in funeral homes a few years ago. It's terribly black. Terrible. But anyway, I realised
recommendation, by the way.
No. And by the way, I realised that it doesn't matter if you think something's a good buy-in. If the market crashes, the whole market crashes. So I sold all that and got rid of it. But I just went to CanStar and found a little thing that cost very little in terms of the share trading, and did offer. You look at things. Do they offer just Australian things and or overseas things, and the EFTs or whatever it is else that you're looking at? So just have a bit of a search. We don't really know much more than that. Much more than
probably just to add to that, the other service is called a stockbroker. So the platforms like ANZ E-Trade, etc., is when you choose your own stocks and you just want to log on and buy it. If you want guidance on what stocks to buy, that is the role of a stockbroker. So there are ones around called JB Weir and like that you can just sign up to, and they charge you a commission on the sale, the purchase and the sale.
Yeah, I previously went. What about the ETFs? Do you also no longer recommend them? I just thought of having, because I'm definitely going to do the gold and silver, and I did download your book yesterday and read through it. But I just thought just to have a little bit of a mixture. So what about the electronic trading funds or?
Yeah, so like back in my day as a financial planner, the exchange traded funds were definitely the way to go, because if you're trying to diversify your portfolio, it's hard to select, even if you selected, say, 20 different shares, you're still not properly diversified, as in investing in every single different type of industry, different countries, etc. Whereas the exchange traded funds, they're doing that for you in a way. So that is the way to go. Unfortunately, they are run by the likes of BlackRock and Vanguard, who I thought were great in the day, but not so much anymore.
Not so much, no, not after the last 5 years.
Yeah, but then again, they're going to own the world, so you may as well invest in it. I guess that's not a recommendation. But yeah, that may be the easiest, is if you just select your own share trading account and then select some ETFs like that.
Okay. And then I just did have another question. Actually, I was just going to say one of the most successful ones I bought, and I bought it through my super account, was QBE Insurance. It literally doubled and tripled, and it was very good. But obviously, I had to sell it.
Yeah,
through
I
my
would
super fund.
be, as I said, I'm not a financial planner anymore, but just personally, I would be really worried about investing in insurance companies at the moment. Just with everything that's going on, I can't see how they can possibly stay liquid for too much longer.
Yep. Okay. Thank you.
All right. So, Kay, in the chat, the question is, does the crypto in, say, CoinSpot need to be transferred to a physical wallet for audit? I'm assuming that's an SMSF audit. I'm assuming, Kay, you are with us, and your auditor will, not your auditor, your accountant will be able to give you the very specifics. But my understanding is they just usually need a statement of all the trades that have gone in and out. I don't believe it needs to be transferred to a physical wallet for the audit. You just need that statement to satisfy the accountant, and then if for whatever reason the statement doesn't satisfy the accountant, they'll tell you exactly what they need. But CoinSpot, I think, provides the statements that satisfies the accountants and the auditors. Tony, he first says, apologies, I can't figure out how to activate the camera or microphone. That's okay, you don't need to show yourself. We know you're from the ATO. The question is, how do you see us using gold or silver in our SMSFs in the future for retirement money, with the pending arrival of the digital IDs and the CBDC, etc.? For example, if we sell gold to a dealer, will we get centralised bank digital currency that limit what we can use our proceeds on? Will we have a parallel system of barter, trading gold, silver for living expenses? How do you future, Cass?
For sure. Mary Jane, I know Mary Jane's in the process of getting our second book out, which is going to talk about crypto and cows, I believe. This might be a good topic for that book as well, a bit of a discussion on the digital IDs, etc. But yeah, it's a really good question, Tony. We talk about this quite a lot. And we all know that the digital ID is coming in. We will try and resist it for as long as we can. But unless something radically changes in the direction of the world, it's coming. So yes, when you sell the gold, well, firstly, what I'll say about an SMSF is that it is entirely in the digital world anyway. Yes, you can take your gold out and hold it physically, but everything that has to go in through the SMSF, it's all recorded. It's on the profit and loss and the balance sheets. It gets reported to the ATO. It is firmly in the digital world, SMSF. So when you've got gold and silver in a SMSF, even if you hold it physically, like in your own backyard or vault, to cash it in and use it in an SMSF, you will still need to take it back to a dealer, cash it in, get them to pay your bank account. So that is all still in the digital world. You have to do that in an SMSF. Then if you're now on a pension or withdrawing from super, once again, that would have to be a digital transaction. And I believe all of us, no matter how much we resist the digital world, we're still going to have one foot in it. So your super SMSF will have to pay you to a digital bank account, and then hopefully we can still get cash out of some form and then go under the radar with that cash. There is also end of the world, like really apocalyptic situations where, what happens if everything crashes, government crashes, the world crashes, we're in a world war, whatever, and what will happen then? Well, I can tell you, I don't really care what the ATO says about my SMSF in that scenario. If I've got gold under my bed, even if it belongs to my SMSF, I hope there's no tax office people watching this. Bugger it. I'd just start dealing with it. If I needed food, I'm not going to go to all the trouble of trying to get it to a dealer, get it in my SMSF, get the cash, the government takes the cash, don't get the food. Bugger that. I'll be trading my silver coins for cows and whatever I want to do. I'm not recommending it, but that's the end of the world scenario. somewhere in between the digital system and the end of the world scenario. It is good to know that Ainsley Bullion, who is one of our preferred suppliers, is 100% on our page. They understand everything that we worry about. I have conversations with the CEO of Ainsley on a regular basis. They know where we're coming from. They're coming from the same page. I'm not going to say that they might have a black market, but I do know that in the history of the world, when things have collapsed, there's always black markets that come to the rescue. And there are already groups of people all over Australia. Mary Jane and I even tried it ourselves, setting up communities to grow food and be self-sufficient. And some of those communities are already starting to trade barter in products. And the history of gold and silver was that it was simply a method of trade. So if you wanted a cow, rather than swapping a cow for a truck of potatoes, you would swap a cow for a bag of silver, and then that person would take the bag of silver and buy the potatoes. That's why gold and silver came in. So I can absolutely see that we would go back to a system of trading amongst ourselves in the worst case scenario. Hope that answers it in a long form, in a lot of words.
Yeah, so Tony's just replied, we'll stick with gold and figure out the rest later. Thank you.
Yeah, and that's what I come to sometimes as well. I just say, look, we can't prepare for every scenario. What we can prepare for is that gold and silver is a fundamental good investment. It's always had good returns in the past. You've got the solid metal that can't just disappear in the flash of the eye, and we'll work out where to go to depending what happens over the next few years.
So Richard is asking, is holding bullion safe stored in a vault? Sorry, is holding bullion safe stored in a vault or with a bullion dealer? Would these be seen as the first targets for government confiscation?
Yeah, that's a question we often get as well. Look, the government confiscation, as far as I'm aware, has only happened once in the history of the world, and that was in America, and I think it's around the 1920s or 30s. And it wasn't actually a confiscation. What actually happened is the government asked everybody, please return your gold and silver. I think it was just gold. Please return your gold. All of those really compliant people in the world went, yes, sure, Mr. Government, what time would you like me to turn up? All of the farmers and everybody out west said with guns went, yeah, make me. And they didn't go out of their way to chase people down or go to people's farms, and they didn't do anything. They actually relied on compliance. But, you know, if we want to look at real, I guess, ultimate final, maybe a 1%, 2% chance about government confiscation in the future, yes, I would see them going to the likes of ABC Bullion, who is a big storage house, and the Perth Mint. They store a lot of the money for the governments. I could see that would be the government's first target. So as a result, I do have money stored with gold and silver stored with Ainsley Bullion. No problem. I have money stored in vaults. If we were heading down the, you know, rockets are launching and things are really, really escalating really quickly, I probably would go to Ainsley Bullion and take my money out and store it privately, just to be absolutely safe. But for now, I see no problem whatsoever.
Then Richard's next question is, it's gold backs, BACHS, are used in the US, paper gold notes. I don't know anything about that. Cass, do you know that? No?
No, I don't. All I would say is that if it's just paper representing gold, then it's not really gold, and don't do that. Just one sec. My daughter is making a hell of a racket in there. I'm just going to close my door.
And I do know that, isn't it, Texas just is about to or has finalised their gold back dollar or something like that? I used to pay a lot of attention to all that, but haven't daily kept up on it because I had a little break for 2 days. I had a break, which was lovely. But yes, I don't know. Richard,
I think those gold backs were have been used in Arizona for some time, and they're actually a gold leaf impressed into the note, which is quite interesting.
Yeah, nice.
You can't get them in Australia, unfortunately.
No.
We're always behind.
Oh yeah, Pete sells gold backs have gold in them, but the premium is a killer. Ah, right.
Ah, there you go.
So now there's just a few comments. Jane to say ditto, thank you, and through your recommended supplier. Does anyone have their hand up? We've got lots of people here today. We've ripped through those questions. I know the first person. Oh, Richard, you said you had lots of questions. Did you get through all your questions?
I have a couple others.
No, there you go. Over to
Thank
you.
you.
Oh, and Pete then has a question.
Let Pete go first, and I'll follow through with a couple here.
Okay. Over to you.
Thank you. How are you, ladies?
Great,
just
thank you.
Quick one. I haven't paid into super at all because I've been concentrating on getting rid of the mortgage on the house. That is very soon going to come to an end, and to re-put those funds back in, should I be doing it pre-tax or as a contribution after tax?
Yeah, so Pete, the easy answer to that is for me to ask you a question you might not want to say on here, but it depends what your income is. So if you have a high income, say over
No,
60,000.
I'm just a fiery mate. So yeah, 100 grand a year, whatever fireman, mate. Yeah.
Yeah, okay, no, 100 grand a year. I mean, that's reasonable, because if you put it in as a tax deduction, it comes off your income. So
Yep.
just let me have a quick look at the tax rates on 100 grand. I think it'll be around about 30%. Tax
Yeah,
rates.
that sounds about right.
Yeah, 100 grand. Yeah, 30 cents in the dollar. So if you put money into super, say 10,000 into super, you'll get a tax deduction that's worth $3,000, so 30%.
So yeah, it's worth doing it pre. Yeah.
Yeah, the super fund pays tax on that at 15%. So the tax benefit really is only 15%, but still, I believe any tax benefit is
100%. Yeah, 100%.
Yeah,
and you
is
answered my other question, which was I was thinking about getting into some platinum with the SMSF because gold's up there and platinum isn't. And if history repeats, well, platinum's generally higher than gold. So yeah, and obviously that's okay to do.
Yeah, that's absolutely okay to do. There's not as much research and I guess historical information on platinum and palladium. So as a result, I've simply done about 5% of my allocation to those metals.
Yeah, sounds good. Yep.
Yeah, but yeah, if you research more and are confident more, that's fine as well.
Yep. Thank you, ladies.
Thank you.
No worries. Just quickly, Pete, on that also as well. I'm presuming you've got an SMSF with us, have you?
Yes. Yep.
Yeah. Okay, so what you can also do is before you make those contributions, just talk to one of the accountants at FFSS just to double check, because there's a few other things that can catch you off guard, if rules that sort of seem to change regularly and pop out. So just double check with one of the accountants.
No worries. Thank you.
Now, Richard, before we get back to your questions, Glenda has her hand up.
Cass, I've just got a question about insurance in SMSF. We've just been looking at our insurance because it's costing quite a bit each month with life, TPD and trauma, which is currently outside our SMSF.
Mm-hmm.
And I heard Grant talk about on one of the many YouTube clips I've kind of listened under the FSF YouTube that you can have insurance inside your SMSF. So I just wanted to find out what insurance is that, and is there the possibility of transferring insurance that's in our personal names for life, TPD and trauma into our SMSF?
Yep. So in relation to that, I'm not a financial planner anymore, but the last time I looked at all this, your life insurance definitely can go into the SMSF. Sometimes the TPD can be, and trauma can't be. So sort of 3 different answers there. But the answer is yes, you can transfer it to your SMSF. It's not so much a transfer. You speak to your insurance broker, they will get you new policies in the SMSF, then they will cancel the personal policies you've got. And the reason they do that is just to make sure they can get the policies in the SMSF. Sometimes a medical issue or something. Sometimes the insurance companies always change their tests and their rules The last thing they want to do is cancel your personal policies and then find they can't get you one in the SMSF. So your insurance broker will help with that. And the benefit of doing it in the SMSF is simply, as you've said, it saves on your cash flow if you can shift some of those costs into the SMSF.
Okay. We just sorry, a secondary question. We ditched our broker because we did a little while back. So we don't actually have one now. And I know when I've spoken to the insurance company, they're kind of like, we can answer specific questions but can't give advice. I'm assuming that's probably a pretty black and white question that I could ask them, can I move it into my self-managed super fund? But otherwise, if I did have to go down the broker path, is that something that is that in grant scope, or is that not?
No, if you email me, I can introduce you to somebody.
Okay, cool. Thank you.
Great. All right, Richard, back to you.
Thank you. Life insurance policies. I've been hearing a bit about this lately, again, on all the rabbit holes I go down. And they say that all the billionaires and all the wealthy people invest into these life insurance policies. So you can invest and put cash and use it as a store of, I suppose, store of wealth. And I'm not sure if I'm reading this correctly for Australia and whether it applies back here, and whether, if they do exist, can you get your money back out when you want?
Yeah, Richard, as far as I know from all my experience in financial planning, we don't have that equivalent product in Australia.
Okay.
Yeah, we simply have just plain old life insurance where you pay a premium, hefty premium, gets bigger and bigger until, when you get older and to the point when you need it. And then if you don't die, you don't get anything.
Fair enough. And the other one, if I can, just with that trust, if you, from what I'm understanding, if you don't action it at the time of purchase of a home, if you were to then put the home into a trust, does that mean I have to then pay? It's like selling the house again, essentially, and I've got to pay stamp duty.
Yeah, absolutely, it's stamp duty. So it's really important for anyone thinking of buying a house to decide whether you want it in the trust, like before you even sign the contract. In some states, if you've signed a contract in a personal name, you can change it to a trust before settlement, but it really depends on the state. So yeah, always, and that's an area that I've specialised in for a very, very long time. So anyone wanting to consider buying a property in a trust, yeah, I'm the one to speak to about that.
Okay, thank you.
Cass, what about this very advanced gift loan back strategy? Is that something?
Yeah, that's worth mentioning. We do have through Grant Abbott, he has a very complicated strategy where, let's say you've got your own house and you want to protect it, he can set up a trust, and then the equity in the home transfers to the trust, and then there's a gift and a loan back strategy. It costs around $10,000 to set up, but it does give you the protection, and you don't get the land tax and the capital gains tax problems that you would otherwise have. But it costs $10,000 to set up.
Minimum, yeah.
Okay.
So if you've emailed me, Richard, so we're in touch, and I can send you some more information.
Awesome.
Bronte, that because you're doing yours through Grant and so on. If did you have a meeting set up? You've got a meeting set up soon, or did you have a meeting yesterday? Sorry, I've been away for 2 days.
No meeting.
No meetings yet. Okay, so that might be something that but you've already signed the contract, Bronte, haven't you? So yeah, okay. Yeah. All right. Now somebody else, Helen was just saying that she's been sitting in here and got answers without asking a question, because a lot of people have similar questions. She's a pensioner and was wanting to know about a trust for the house. Land tax is the killer, and she's in South Australia. So yeah. Tony was saying, would you please also send me the same info on this buyback house trust? So what I will actually do, yeah, sure. What I'll do right now, though, is I'll just get the link to our YouTube channel playlist, which is on estate planning. And we've got estate planning 101, 102, and 103. And it touches on it in 103. 103. And this is basically Cass is just going through all the basics of estate planning and asset protection. And I'm just looking at for the list here. No, not that one. And then in 103 towards, she does touch on this gift loan back strategy. If you did want to find out more and were interested in it, then email me and I can. So Tony, you've got my email address in the chat there somewhere. I'll just email me and I can give you a little bit. I can't give you a lot of information in the email. It really requires a consult with Grant to sort of go into understanding your situation and how it might be applied, and then he'll explain the mechanics of it. So let me just find that. Cass, did you have anything else you wanted to say?
No, not on that. With that strategy of grants, it is, Mary Jane and I have considered things like that ourselves personally and decided not to go ahead with that cost. However, if you're in a risky situation where you might have, say, family coming after you or unwanted people coming after you, people trying to sue you, people threatening litigation, anything like that, or you're running a business that might have potential litigation, lawsuits, liquidations. Basically, it depends on your level of risk. Your level of risk is high, then that trust loan back situation would be worthwhile. If you're just your average person going through life, not doing anything risky, then that structure really is not really necessary just for your average Joe Blow.
Yeah, and in that series of videos that Cass is presenting, 101, 102, and 103, there are a couple of examples where there have been legal cases, because it's the litigators that are coming after, like the litigators are finding claimants, anybody that they think can have a claim on an estate, and the litigators will say, I'll get you some of that dosh. And then they go hard, and in the end, who wins? The litigators win, and the family, both sides end up with much less, and the litigators end up with a lot more. So, if it's you'll be gone, you don't care. But if you do want to care about your family and you don't have enough money to put a structure in place, you can have a chat to them and say, well, do you want to kick in some money to create a really strong trust? So these trusts that we create with Grant are called family protection trusts, and they're designed so that you set it up once and it cascades down through generations, through the bloodline. And in the bloodline, you can include adopted children if that's who you choose to define as being in the bloodline. So yeah, it might be a one-off cost at the beginning, which is quite substantial. But if you think about that, it's going to be running through the generations, then you're the number one and you toddle off, and then the number 2 and 3 come in, and then there's the number 4, 5, and 6, and so on. And it can be split down throughout the generations. And it's a way of getting those assets passed through, protected from any hungry litigators or their desperate claimants. So Jane, you have got another quick question. Go for it.
Just another quick question. I have a term deposit set up because I sold a property 2 years and now am priced out of the market. And thanks for to the government for bringing so many people into the country, they now want to have some of that interest that I've earned, which has really annoyed me, because the only reason I've got a term deposit is I can't afford to buy a property anymore. What are your thoughts on term deposits versus putting it into the self-managed super fund, please?
Okay, so just capping on that, are you going to be using the money for something?
Well, at the moment, no. Like, I've literally had it in since like just over nearly 18 months.
Okay, so you got no plan to buy another house or buy anything with that money?
I would like to, but I'm just working casual at the moment, so I can't get a loan. So I'm just keep rolling it over, getting a fairly decent interest rate. But of course, now the interest rates are coming down, so is the interest getting back. But as I said, I now have to give some of that to the government, which I'm super annoyed at, because I didn't even earn that much money in the last 12 months. But
yeah, they'll get you any way they can. Look,
yes.
you might have heard me talking about earlier about like not leaving money in a bank account. I don't. term deposits the same as leaving money in a bank account, that if the financial system did crash, then, you know, potentially that all that money can be lost. We do have what's called the Bail-in Act in Australia, which we haven't spoken about for a while, but it's still sitting there, where in the event of an economic collapse or a bank collapse, the bank can do what's called bail in your money, which is basically they say, thanks for that, we want that money, and they can give you shares in the bank in return, and you may never, ever see that money again. So for that reason, I personally have all my spare cash in gold and silver. And the downside with gold and silver is that there are transaction fees to sell. So you can buy, and then when you sell, you do lose a bit in commission. But the way gold and silver have been performing lately, they've been skyrocketing. So the commission, yes, it hurts a bit when you see it, but you know, that normally in all the cases I've seen with our clients, the gain has well and truly outranked the commission they take anyway. And the other thing with gold and silver, like with the interest in the bank, because you earn that, as in it goes into the bank, the tax department will tax it every year. Whereas with gold and silver, you can have the money sitting there, you can leave it there for 2 years, 3 years, 5 years, 10 years. You don't get taxed until you actually sell it.
Okay. And another option you might want to have a chat to Peter about, if you don't plan or if you think, okay, for the next 6 years, I'm not going to buy a place, I'm going to just invest that money and double it maybe, or whatever, increase it so that then I'll buy it. You might be able to contribute that into your SMSF, invest it in gold and silver, then when you turn 60, see where it's sitting then, and if, as long as you're in pension mode, then when you sell it, it'll be capital gains tax free, and you can take it out and buy a place.
Okay.
If you can hang on for 6 years. That's my mental math.
Yes, you remember. Yep.
But before you do anything, and this goes to everybody, before you do anything, number one, please give yourself a little bit of time. We're always rushing to get especially bare trusts done that needed to be done yesterday. And a bare trust is when someone wants to buy property with an SMSF, you need to set up a separate trust. Yes, we can do them quickly, but we do appreciate a bit of time. But more importantly, you need the time to think about what is the best strategy, what is it? And sometimes you don't want to rush into things, and you definitely want to get professional numbers crunched from your SMSF accountant. So set up if you've got an SMSF with us, set up a time with Peter to say, this is kind of the strategy I'm thinking of. Look at my numbers, help me understand them, double check my understanding is correct, and then tell me things that you don't know, because it's very technical. And Peter, like Grant and Cass, when she was also very technical on the tools, there's so many strategies, so many technical strategies that are well beyond me. So I'm sorry, I can't help you on those ones. But Peter and, Peter's the one to go to. Richard,
thank you.
trust for me is partially for future protection from the government if things get worse. Do any of the trusts act as a deterrent from government attack, Cass?
I love this question. So there are people out there particularly in the freedom movement, that have been selling trusts and selling them for good money, like $10,000 to $20,000 to set up. I have actively spoken out against them, and I'm about to do a whole video series which will include me talking about this as well. So let's say a trust, for example, is really just a document. So at the end of the day, you'll have this document that says, ABC Trust, blah, 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 blah. And so let's say the government attack. Let's say we're right down the rabbit hole and the CDC have taken control, and the World Health Organization and the UN government are storming down the streets with their tankers, telling you to get out of your property. Do you really think standing at the door and going, but it's a trust, do you really think that's going to help your property? No. So trusts are good for protecting against people suing you, or liquidation and bankruptcy and things like that. They will not protect you from the government. Like, we don't even know how the government's going to come after our property yet. I believe it's going to be through, so let's not get too conspiracy. Let's say exactly what's happening. They're doubling the rates, doubling the land taxes. Insurance premiums are going, to insure my house, it was like $6,500. It's like all of those expenses are going through the roof, to the point where people aren't going to be able to afford their properties. So once again, a trust is not going to help you with that. I don't see any way a trust is going to help you from a government attack. People are also saying that these trusts they're setting up and charging a fortune are for private trusts. Load of crap. Yeah, okay, a private trust is simply a trust. We can set one up for you that doesn't end up getting a tax file number or an ABN. So therefore these people are saying, so it's private. The government doesn't know about it. Try and buy a property in what's called a private trust. You can, but you're going to put the name of the trust on that title deed. Is that really private now? It's on the land titles register. It's no longer private. So yeah, that's my take on that. And I've yet to, all the people that I've challenged about this, no one's yet to come back and try and talk to me about it and try and convince me otherwise, because I think they know they're right and they're just basically ripping people off setting up these trusts.
So we've got 3 minutes left, and we've got 2 questions. Glenda, thank you for being so patient.
Okay,
And then
just a quick one. Cass, just picking up on the bail-ins that you're speaking about before, I understand what happens when there's money in the bank, and potentially the bank will take that. What would happen if you had an outstanding loan with the bank? Would they demand that payment straight away? Would they sell it from under you? What scenarios do you see playing out there?
With the bail-in's more about them taking cash you've got in the bank, because that's going to be nice and easy for them just to go, thank you very much, and take it out of your bank account. When it comes to selling your property from under you, I don't think they would be able to do that whilst ever you're still abiding by the conditions of the mortgage. So when you buy a property and you sign your mortgage document, a 200-page document, you probably didn't read it. As long as you're abiding by all those conditions in those 200 pages, which is normally paying your loan on time, things like that, not ripping down the property or doing anything untoward to it, they can't just come in and take it from you. So I wouldn't see a situation where they'd be doing that.
Okay, thank you.
And Adele, you're the lucky last.
Yeah, just a question regarding gold and silver. I recently went into Ainsley and changed some gold for silver, because everyone's been saying, oh, you know, you're better off doing that than keeping it in the gold, change it to silver. So do I have to, even though there was sort of like really no money changing hands, it was a swap over from gold to silver, do I have to declare anything or?
Yeah, unfortunately you do. It is a sale.
Is this in your SMSF or personal?
No, just privately.
Privately. And how much? Was it under the $5,000 threshold?
No.
Yeah. So, yep, technically you will have to declare that on your next tax return.
Okay. Thanks.
But Adele, did you do that only recently?
Yes, within this month.
Okay. And are you still eligible to put money into superannuation?
I guess I am, yes.
Yeah, okay. So it might just be worth you talking to one of the accountants at FFS, not urgently, just before 30th of June next year.
Yep.
Because there might be something we can do to put some money into the SMSF as a tax deduction to offset any capital gain.
Okay.
Yeah. So always, for anybody watching this, whenever you sell an asset that's got a capital gain, talk to your accountant, preferably before you even do the sale, but definitely talk to the accountant within the financial year that you've done the sale, because there can be some things we can do. Capital gains is one of the taxes that is quite easily avoidable. And I don't say that in a bad way. I'm not cheating. I'm not recommending you rip off the tax department. I wouldn't recommend that. But whenever there's ways that you can legally minimise your tax, let's look at it.
Thanks, Cass.
All right. Michelle's typing, but it is 1:30, so we're going to wrap this up just in case. No, Michelle, you didn't have anything? All right. Well, thank you very much. We will have another one in probably 2 weeks to a month. But recently, Cass, and sometimes even I join the Voice of Freedom, which is on YouTube. And we always put it on our website. We put the little links on our website with Carl Lee from the Voice of Freedom. We often have on Tuesday night. The next one I think is a Thursday. We're having a little chit chat about what's going on. Michelle's saying the Economic Roundtable on August 19, will it bring super changes?
I used to have a joke. It's not very funny, but I'm an accountant, so I'm not very funny. But it was that all the politicians get together on Friday night to have a beer and change super. So having said that, you know, they are required in their rules not to do retrospective changes that affect things retrospectively. So most of the time they don't. But we will watch that space, and that's a good reason to just watch our newsletters and watch these Q&As. Is that when anything comes out like that, you know, we'll be the first to analyse it, think about it, come up with some things, with scenarios we can offer to help, and go from there.
All right. Thank you very much. And we'll see you next time.
Yeah, thank you, everyone. See you next time.
Thank
Thank you very much for your time.
Bye. Bye.